Welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies for MetaTrader 5 piece by piece so you can understand exactly how they think. Today we're studying an expert advisor called rank correlation trend pullback. It's a trend following by the dip approach, but its trend engine is unusual. Instead of a moving average or a regression slope, it uses Spearman's rank correlation between price and time to judge whether a real, orderly trend is in force. By the end of this video, you'll understand the indicator, the entry timing, and the risk controls. Remember, this is educational only. Let's start with the big picture. Rank correlation trend pullback is designed to join trends that are already established rather than to predict brand new ones. It can be applied to any symbol and any single time frame you choose at test time, because the core measurement is scale-free and needs no tuning per market. The heart of the strategy is Spearman's rank correlation. That's a mouthful, so let's unpack it. Ordinary correlation, the Pearson kind, rewards a perfectly straight line and can be thrown off badly by one violent bar. Spearman instead works on the order, or ranks, of the closing prices. It asks a cleaner question, step by step. Are prices mostly making progress in one direction? A steady staircase upward, with the occasional shallow dip, still reads close to +1. A steady decline reads close to -1. Sideways chop sits near 0. And because a single outlier bar barely changes a rank, the measure stays sturdy across different markets and volatility conditions. Here's the key design choice. That rank correlation is used only as a regime gate. It confirms that a robust trend exists. It never, by itself, generates a trade. The actual entry timing comes from a short moving average baseline. The strategy waits for price to dip below that baseline and then reclaim it, so it's joining an established trend on a pullback at a relative discount, rather than chasing the moment the trend first appears. There's also a magnitude filter built from average true range. A trend can be perfectly ordered, yet cover almost no ground, and rank correlation alone can't tell the difference. So the strategy insists the net move across the window is large enough relative to recent volatility before it will act. Who is this style of thinking suited for? Traders who like patient, rules-based trend continuation, who prefer waiting for confirmation and a pullback over reacting to every wiggle, and who want to study how a non-parametric statistic can be turned into a trading filter. As always, trading involves risk, losses happen, and nothing here is a recommendation to trade. Let's walk through the logic exactly as the expert advisor runs it, once per completed bar. Nothing is evaluated mid-candle, which keeps signals stable. First, the strategy takes the last 20 closing prices, that's the rank period, and computes Spearman's rank correlation of those closes against their time order. That single number, often written as rho, ranges from -1 to +1. Second comes the regime gate. The default trend gate is 0.50. If rho is greater than or equal to +0.50, the strategy considers an uptrend in force. If rho is less than or equal to -0.50, it considers a downtrend in force. Anything in between is treated as chop, and the strategy simply waits. Third is the magnitude filter. The net move is the current close minus the close at the start of the window. The strategy requires the absolute value of that move to be at least min-trend ATR, defaulting to 0.5, multiplied by the average true range. This stops the correlation from acting on a trend that is perfectly orderly, but trivially small. Fourth is the entry timing, and this is where the fast baseline matters. The fast baseline is a 5-period simple moving average of the closes. For a long, the strategy checks that on the previous bar the close was at or below the baseline, and on the current bar the close has climbed back above it. That's a dip below, then a reclaim. For a short, it's the mirror image, the previous close at or above the baseline, and the current close rejecting back below it. Fifth, the strategy combines everything with distinct, symmetric rules. A long needs an up regime, a positive net move, and the reclaim. A short needs a down regime, a negative net move, and the rejection. Only one position per magic number is allowed at a time, so it won't stack trades. Finally, risk management. When a position opens, the stop loss is placed at the entry minus, or plus, SlR multiple times ATR, defaulting to 2. The take profit is set at TpAtrMult multiple times ATR, defaulting to 3. That default target to stop shape is 3 to 2, or 1.5 to 1. Position size is a fixed lot. Everything is volatility scaled and mechanical. Let's read the actual MetaEditor code. At the top are the inputs. Rank period 20 is the window for the rank correlation. Fast period 5 is the short moving average baseline. TrendGate 0.5 is the minimum correlation for a trend to count. Min trend ATR 0.5 is the magnitude filter. ATR period 14 drives both that filter and the stop and target distances. Then SlATR multiple of 2 and TpAtrMult multiple of 3 set the risk brackets, and lots is the fixed size. Below that, the strategy sets up the regime and pullback flags. Up regime is true when rho is at or above the trend gate. Down regime when it's at or below the negative gate. Reclaim up is true when the previous close was at or below the baseline and the current close is above it. Reclaim down is the mirror. Then a magnitude check returns early if the net move is too small. Now the two signal blocks. The buy setup asks for an up regime, a reclaim up, and a positive net move, and calls try-enter for a long. The sell setup asks for a down regime, a reject back below, and a negative net move, and calls try-enter for a short. Inside try-enter, for a long the stop sits below entry and the target above, and it calls trade.buy. For a short, the stop sits above and the target below, and it calls trade.sell. Both brackets are scaled by ATR. That's the whole decision, cleanly mirrored on each side. Let's watch this play out candle by candle. On screen you can see the price candles, the blue fast baseline riding through them, and below, a subpanel showing the Spearman rank correlation, our row, with two dashed lines marking the trend gate at positive 0.50 and negative 0.50. We open with a steady climb. The first few candles each close a little higher than the last, and watch the subpanel. Row lifts quickly, crossing above the positive 0.50 gate by the third and fourth bars. That tells the strategy an orderly uptrend is in force. But notice, the strategy does not act yet. The gate being satisfied is only permission, not a signal. Then comes the setup it's waiting for. On the fifth candle, price pulls back and its close slips down to the blue baseline, dipping to or below it. Row stays comfortably above the gate through this dip, because one shallow pullback barely changes the ranking of prices. Now the next candle closes back above the baseline. That's the dip below, then reclaim. With the up regime confirmed, the net move positive, and the magnitude filter satisfied, the buy entry marker appears. We're joining an established uptrend on a discount, not chasing it. From there the stop loss sits below at 2 times ATR, and the target above at 3 times ATR, a reward to risk shape of 3 to 2. Price presses higher over the next two candles, and at the take profit marker the long target is reached. The reclaim gave us timing, and the trend followed through. Now the character of the market changes. After the peak, candles begin closing lower. Look again at the subpanel. Row rolls over, slides through zero, and by the 11th and 12th candles it has crossed below the negative 0.50 gate. A downtrend is now in force. Again, the strategy waits for the pullback version of its setup. The 12th candle offers it. Price pops up and closes back above the blue baseline, a small countertrend bounce. The very next candle rejects that move, closing back below the baseline. That's the mirror pattern. Pop above, then reject. With the down regime confirmed, a negative net move, and the magnitude filter satisfied, the sell entry marker appears. For the short, the stop sits above at 2 times ATR, and the target below at 3 times ATR, the same 1.5 to 1 shape. Price continues lower over the next candles, and at the final take profit marker the short target is reached. Notice how both trades share one logic. Confirm a robust, ranked trend, wait for a pullback against it, then enter on the reclaim or rejection of the fast baseline. The correlation defines the direction, the baseline defines the timing, and ATR defines the risk. Of course, not every setup would resolve this cleanly, and losing trades are a normal part of any approach. So that's rank correlation trend pullback. We saw how Spearman's rank correlation acts as a robust, scale-free gate that judges whether an orderly trend is genuinely in force, how a short moving average baseline times the entry through a dip and reclaim on the long side and a pop and reject on the short side, and how average true range sets both the magnitude filter and the stop and target distances. We walked the exact code and traced a full long and short example on the chart. Everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.